Check, 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 check. What is up? Let me get this out really quick. All right. Morning. You guys hear me all right? Check one, check two. I think we're okay. I got all kinds of, looks like audio inputs that are all over the place. Cool, no echo? It's the only thing, the reverb. Anyways, so morning, happy Monday. Wow, getting a little sell-off here across the board as somewhat expected. So big stuff planned for this week, actually. A huge week in terms of economic news. Last week, super light, pretty slow going. Sorry, this date is wrong. Today is not the 29th. It is the 12th of September. So, excuse that. It's like, let me turn these guys off. All right, so if you're new here, this is what we do. So every Monday, not at the open, not on Sunday, we do this Monday at the lunch hour for a very specific reason. And this is really our Monday morning meeting. And what we do, it's like any other corporate job. Everybody kind of gets together on Mondays and we kind of plan out the week. What happened, what's important to note, and what are we looking forward for? So I actually believe I might have missed some of my recap stuff. So I'm gonna kind of shoot from the hip on some of that. So if anybody has any kind of headlines that are interesting to them, throw it into the chat. And then if you're going and you want to have some if you want to take a look at some tickers for the week. So most of the time we're going to be looking at weekly swings on this kind of broadcast. So throw those into the chat as well. I'll be watching that and we will have some time at the very end to pick through some specific trades. So I have a couple that I have in mind. Before we get started, just got to point out that we are an options trading group. We will point out some probably options trades. So before you start trading, always call 188 options and get a copy of characteristics and risks of standardized options if you have not. So just be careful. And everything we go through today, by the way, is kind of live. So it is live. So it can change fluid throughout the week. And that's really what we're going to highlight. But so recap in terms of economic data, like I said, last week, really not a whole lot. We got some manufacturing data that came in, not really moving a whole lot of anything. So the biggest thing that happened last week was Powell's speech, and that did definitely move the market. So I'm going to take a look at some of our indices later on here, and we're going to point out probably some pretty critical levels that will shape the rest of the week moving forward. This week we have a lot. So I think one thing to note about Powell's speech, so last week we had 3 Fed governors come up on, I believe it was Wednesday. Then Thursday was the big day for Powell. And Friday we had 3 more come right behind him. And for the most part, it wasn't like he said anything new. But what was different was like the brevity of the speech. And it was just very crystal clear what he said. And that was, hey, we're taking a hard stance on inflation and we're going to stay the course more or less. So, oh yeah, look at that. Don't even have the recap information on here. So I'm just going to skip ahead to the week. So this week we have 2 big days. Really, it's mostly tomorrow. And tomorrow's number is CPI. So what we do want to do is, I'm going to pull up one thing here. It's called the Cboe Fed Watch tool. And you can just Google it, right? So I just Google Cboe Fed Watch. And you'll get this right here. Kind of countdown to FOMC watch. And this is what's important. So not this week, but next week. This week we get something called CPI, which is essentially the inflation rate. And I don't think anybody's thinking that it's going to come in like crazy different. I think really, even if it comes in, I think we're thinking it's going to come in lower. But what's important here is that this is a 92% probability, meaning that the market is currently pricing in 92% probability that we're going to raise. I believe this is 75 basis points on next week. So next week we actually get the rate decision. This week we get major data point for inflation. The only thing, really, if it comes in super hot, and this is where we are, so the inflation right here, it's expected at 8.5 for the year. Actually wouldn't really look at the yearly number. What's important is going to be these two right here. So the core inflation and month over month, what is called headline inflation. So let me get back to our slide really quick. That's going to be on Tuesday. Wednesday we have PPI, which is Producer Price Index. And if you didn't know, CPI, by the way, that is Consumer Price Index. Nick is saying DH short selling probe, Amazon, Microsoft, JPM. Okay, you can take a look at that. And Thursday, retail sales, not a huge market movement event, at least not lately. And then Friday, consumer sentiment. So the biggest day of the week is actually tomorrow. So coming into tomorrow, I don't want to have a whole lot of swings on unless we're like completely out. I think, the market has bounced quite a bit, and we're getting up to a pretty key level. We do have some levels we want to keep an eye on as well, though. I'm just going to run through this. So today we mostly just bond auctions, things like that. Not really anything major market moving. This is the big day. So pre-market, we get all the inflation data tomorrow. So when you look at this stuff here, by the way, the time zones are West Coast, so I live in California, so everything here is in Pacific Standard, so you have to adjust, for your time zone. And then on the right, we have previous numbers and consensus numbers. So what's important to note when you look at these things and you're looking at any economic calendar is that the consensus number, that's what the market is currently pricing in today. So previous really doesn't matter nearly as much. You can read into it a little bit, but the only thing that's going to move a market is if something comes in wildly different than the consensus or the forecast. And so that's what we want to pay attention to. So right now, the market is pricing in that inflation, and I think it's probably right, is more or less peaked, right? There's going to be two things. We're expecting -1 on the headline month-over-month rate, and so headline is here. Core, again, if you're not familiar, core means everything that does not include like our big expensives like gas, food, and those kind of things. So that's all stripped out of the core inflation rate, but the headline or just the inflation rate here for August, that includes everything. So they're looking, the market's expecting flat. If it's up or down, a tenth or something like that, I don't think it's going to move markets. But what would move markets here is if all of a sudden inflation is way high. So I believe that the market, and based on what we're seeing, the market is pricing in that we're essentially at peak inflation. What would shock the market here is if the month-over-month headline and or core rate comes in significantly higher than expected. So like if the headline inflation rate comes in at 1%, then that would probably be a little detrimental to the downside for markets. If it comes in slightly lower, I don't think that that's really going to move the market, actually. So from my perspective, there's probably a little bit more downside risk than upside potential just from that just purview. So again, we got to wait till actual numbers come out and then see how the market digests it before we can really go in. But I do have some other trades that I have planned that should be fairly independent and not affected by this. So Tuesday, again, biggest day for sure. Wednesday, we get PPI. So if CPI is Consumer Price Index, PPI is actually a little bit of a leader. So PPI means Producer Price Index, and that is what the producer's inflation rate is. So that's the very following day. And again, consensus is the most important. So core, they're expecting slightly higher, and headline slightly lower. So last month, this is where it gets kind of interesting, right? Last month we had a half-point decrease in headline inflation, and they're expecting very similar this week or this month. But again, if this and CPI are coming in way hotter, then that's probably going to change a lot of the outlook. Right now, we saw a big kind of drop earlier, and that was the Jackson Hole speech, actually, I'm sorry, that really moved that market. And we're coming up to those levels one more time. But the Jackson Hole speech is the one that really moved the market. And that was really when we started to price in that extra 75 basis point hike. And that is, well, I won't move it just yet. But anyways, so these are the two biggest days. So producer price index on Wednesday, consumer price index on Tuesday. And then from there, we should be pretty clear. Thursday, really not a whole lot. We do have retail sales, so keep an eye on some things like your Target and Walmarts that have been on a nice little rally recently. If these come in, I mean, this is looking pretty flat as far as expectations are concerned. And then we have jobless claims. So one thing in terms of the current market, the Fed is planning on hikes for 2 more times for the rest of the year, and the market's currently pricing in about a 75 basis point hike next or this month. Yeah, so next week. Not this week, but next week. And then it's really going to be all about what are they expecting, what's the market going to price in the very following month. And that's what's more important. It's not so much about what the actual interest rate is next week. It's going to be about what the very next one is. So if after this current one, I think we start to run a little bit, maybe we'll see, or it'll dip. And then it's going to be October, right? So October is the one that is really more important in terms of market direction. So watching that Cboe Fed Watch tool and what the market's currently pricing in. Continuing claims, I did want to take this note. So we have jobless claims and continuing claims. So right now we know inflation is high, right? And hopefully it's at peak inflation. Typically when you do hit peak inflation and it starts to pull back, it does actually pull back pretty quickly. But what's important to note is like, hey, if our jobless claims here are going up, meaning people are leaving work for whatever reason more and more, and inflation is going up, that's going to be like, that's like worst case scenario in terms of the short-term market reaction. So Thursday, this is kind of another day just to keep an eye on. I don't think it's going to be major. We've been fairly steady around the 225,000 jobless claims number. And then Friday we get consumer sentiment. So again, if this comes in crazy low, that's just going to be more of a flusher if we do get a move to the downside come Tuesday, Wednesday. And honestly, that's kind of what I'm leaning towards. But we'll see. We got some technical levels to take a look at too. All right, so that's it for that piece. In terms of, let's say, headlines. So Nick said, short selling pro looks into Amazon, Microsoft, JPM. I can just kind of take a look at that. Yeah, this is Reuters and Yahoo's. I mean, I don't know if it's going to be a huge thing. I don't know that's going to be supermarket moving. What I would say is I'm going to pull over this chart real quick. And so typically every day I'll come in. My first look as a trader is actually a 30-minute look across all of these things here. The biggest chart, and before I get into the indices, the biggest chart actually is the Dixie. And so the Dixie is the dollar-weighted index right now. And Sunday we gapped down heavily. So we closed Friday at 108. And this is the strength of the dollar against the other larger global currencies. And what's important about this is if the dollar goes higher, right, and we value everything else in dollars, right? So the dollar goes higher, the things that we value stay the same, but it costs less dollars to buy them, which means that things like your gold or silver would cost less, or maybe even your stock would cost less because the dollar itself is valued at a higher rate, if that makes sense. This is a very short-term, more myopic view, like, month to month. But in the stock market, this is kind of like our risk on, risk off measurement. And so this thing has been flying, and it finally broke, and it started to pull back right around 110. So before it actually had this very recent rally, it was 107. I think it was here, 107.40. That was my kind of line in the sand. Anything below 107.40 was going to be fairly bullish for equities. And we saw a handful of other trades that were in like gold, silver, those kind of things that were having a really hard time actually breaking out. Like it looked like they really wanted to, But the problem with that was that with the dollar being so high, that becomes like a real rates situation, and gold, silver, those kind of things, where you would normally think, hey, these things should be running, they weren't able to actually make the breakout. But finally now that we have gold pulling back, or the dollar pulling back, they're getting some relief, and you'll see it if you look at the silver chart, you look at the gold chart, and you look at copper chart. Those things are getting major bids today. And I think that with the news coming up in terms of CPI, PPI, those kind of things, personally, I'm not, if it's a tech trade or an equity trade, more or less, I'm very scalpy. It's still going to be very hard this week to get more than a 36-hour trend on something, so I'd be very light in my like general allocations, except for a sector like gold, silver, those kind of things. So I think regardless of what happens on this CPI, I actually think that as long as the Dixie stays under 10, I want to say 109, really, yeah. As long as the Dixie stays under 109, those should be able to rally for the remainder of probably the quarter, hopefully the month, we'll see. I'm not going out and doing anything crazy, but I did take some, I think it was gold 162. Yeah, gold 162 calls for just this week, and that's how I'm going to start, right? So, oh, wow. I know, not a lot of volume, 475 volume today on these September 16th gold 62 calls. I grabbed them at, I think it was like 85 cents, 80 cents. They're trading for about $1 right now. But I'm going to be starting position there and then probably looking out something longer. Silver, on the other hand, that thing has been on it, like that thing ran out of the gate. So just a heads up. As long as the Dixie stays under 109, I'm going to be bullish this week on metals, probably some miners, those kind of things. All right, so taking a look at the S&P. So we have two major levels. So one level here is this 411, right? Which is, by the way, this level comes straight from this prior consolidation here. And you can actually trace this way, way back. If I pull up to a daily. So this is 411, right here to this huge wick, and where we got a lot of defensive buying here, and some major moves right in this area. So it's just important to know that right here, right now, we're right back into this prior consolidation zone. If you draw this straight across, this is where we will likely stay through today, and maybe coming into the rest of the week, depending on what happens with CPI. And then next week is where I think we'll get some major moves. All right, so I'm going to go back to the 30-minute chart. That's what I'm seeing today in terms of resistance. So we hit basically this right on it. If I took an average week's range, which is this orange box, and let's say that was the high, right? I would actually be looking right around 398 for potential downside. But I do think that this week's going to be a smaller, tighter trading range than normal. So as long as this, yeah, if this is going below this pre-market low, if it does break this, it's like 407. I mean, right now this is just a short, really. It's not going to have a ton of momentum, and it could bounce between this opening range. But downside target for me for the week would actually be 398 and change, right about here where these guys stepped in the past. So last one we had 397, I believe, was 402 here. Yeah, this 411. If we break above 411, then we can definitely go higher. But it would be I believe there's a gap somewhere up here, 420 area, around a 421, give or take, right where these gaps start going, and right here to this top level, right here. So that would be the upside target, as if we do continue to trade above 411. You probably get all the way up to 420 and change. Yeah, I would honestly probably take this right here. 421.40, for the upside target if we do hit that. And then full-blown downside flusher would be right around 396, give or take. So those are targets in your range really for this week on SPY. Again, above 411, stay bullish. Below, really it's going to be below 405, then you can take some bigger trades to the downside. But in between that, just small kind of scalpy things. Qs, 34. When you know becomes, oh yeah, I'll take a look at FCX. So Qs, a little bit different. So Qs are very much in this. So here's this consolidation range for the Qs right here. Right, if we drag this straight across, here we are one more time. So this is exactly why I'm not trying to take any major directional bets while the indices are right in this prior consolidation ranges. I just kind of want to be steering clear of most of that stuff in the interim. Upside targets though, again, if you break above, so the major critical level here for Qs are 314, sorry. At 314, this is right here, this prior low. And then you could look at this block, say order block, what this is, right around here. 316, you would have a quick push to the upside. But yeah, as long as this is below 313 and change, might even take it down here, right where this breakdown is. Yes, 311.72. I'm sorry, 311.72. Not super bullish. Above that, you could take some small targets to the upside, but again, you're still in this major consolidation range, so just be really cautious. Same thing for downside. So downside here on this guy would actually bring you right to this. This is a clean target right here, 292.73. If we do get a shot there, I think either one of these, like 292, 292.84 would be a potential bounce level for sure, or at least the bottom end of the week. I'd be looking like selling some short-term puts right around there. Do you guys want to look at diamonds or IWM? What I would say is IWM, they're all going to be in this very similar spot, right? Diamonds not as bad, didn't hit this this level right here at 328. So this is that major. So see, they're all very similar charts. So 328 would be first upside target if it does break out. Not really seeing that though. So, but if we pull back down, yeah, man, I'm just seeing a range bound week for sure. 313 is this wick right here on the diamonds that I'd be looking for a bounce right around there. Generally speaking though, this is all still very range bound. So 313 here, this guy is not even at that consolidation range. So this is a little bit weaker for sure. Kind of rejected right off the bottom of that consolidation. Interesting. Cool. IWM, all similar. Same range here. IWM looks like it's more trapped than the rest. I don't think it's going to go anywhere just quite yet. So I'm going to take, this is more like this systematic snipe kind of entries, 178, 179 to the downside, and then upside target be like 194 and change. If and only if it breaks over 190 on IWM. Cool. So here's what I want to do. So oil is probably the most interesting chart for me. I have a major support here. This is CL, as in like crude oil futures, bouncing off this 83 level. I think that we have seen kind of the downside go down in oil already. So this is where this is actually a pretty solid support level. So it comes in play here, 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 big time in here. All of this is 83, 83 on crude futures. Came into play one more time last week. Also, you can take a look here. This is exactly where they stepped in and it pressed it higher. I think we have some macro headwinds that could actually move this commodity a lot higher in like the back half of this year. So this is going to be like your oxys, um, like Phillips 66, Exxon, Chevron, those kind of things, gonna be your better positions for that stuff right there. So oil, bullish for the week as long as it's above this 84, 83, almost 84 level. Let's move this up just a little bit. Yeah. If we break above some of these levels, then we could actually press strongly through this 200-day range, and we could see new highs again on this guy with this setup. It's pretty bullish. Gold, again, this is going to be a big one, right? So this gold chart, by the way, if I pull this back to like a weekly, look at this setup. Like, this is the multi-year setup in the making that's going down literally right now. So this is not, this is like a starter position, but this is the chart that a lot of traders have been watching for, I don't know, the better part of 2 years. Like, this is a decade-old chart, going back to 2011. But this setup has been happening for quite a while. We got the first press right here, right off 161 in September of last year. Here we are, September of this year, tagging those exact same levels. This is going to be a big deal. If we get this press, there's going to be some pretty simple targets. 164 to the upside for your first target here on gold. And these are, the way I'm thinking about playing this right now is just very short-term, short-dated weekly options, typically opened at the close. So if we do get, so this is going to be 164 for the first target. Above 168, I'm just telling you guys, this thing could really, really fly. So that's massive. So above 168, then we go straight to 175, and then you've cleared your 200-day on this guy, and you can be heading. I don't want to say. I mean, it could be as high as 185 for the next like 2 months, 30 days, something like that. It's got a lot of legs. One thing I do want to see here, and I'm going to pull this out, and I'm going to change this chart to SLV, which is your ETF that tracks the silver price. Look at this thing. So this thing is not the same chart. Silver has a higher beta. There's some massive call buying going down in silver right now. So you are kind of like actively in the silver squeeze 2.0. 292,000 calls versus 76,000 puts. Just saying like how bullish this flow is on this thing. It is insane. And just like this is all today. So from 1729 to 18 and change today, that is huge. If we do get above 1864, that's when we can really start triggering some serious longer trades. This thing could go as high as 25 on the short term. What I would say is if the underlying is this inexpensive, you want to be very, very careful with the very short dated contracts. I know that there's like a ton of these $9, $19 calls going out for this Friday or September monthly. Just be cautionary, right? So this is going to be actually pretty cheap at the moment from an IV perspective. I'm sorry, I'm looking at the chain over here. If we get a huge push, let's say tomorrow, everything's going to change. Like all of this stuff is going to go massively higher. I don't see a whole lot. I see a lot of the October 21st 1850 calls. I do kind of like that strike. That's only $60. That's probably where I would be sitting at for the first round. I wouldn't be doing any kind of like YOLOs. So you have the biggest strike here is, it's November monthly, November 18th, $20 strikes with 16,400 volume. So it's $45. That's a good price. That is pretty much where you want to be in terms of time to expiration on a setup like this. So there you have it. I mean, and on after big rallies, I would be selling some shorter dated ones. But that's where we should be going. And that would really put you right around $20 right here. Right here. which would actually just be a very simple give or take, right? 50% retracement from this level here. In the interim, let's see, pullbacks, right? If we do get a pullback, it will be violent, so be very careful. That's what I'm saying. So 1750, give or take, would be a pullback level to watch. And this is the ones where you don't want to be sitting in here holding, for dear life for super long. Lower priced underlying is going to have some very volatile IV. But yeah, if you get a shot somewhere in this level, that's what I'm looking at. From here to call it here, this stuff. Just this very recent move. 1785. If we get a pullback in the next day or two, does this line up to this? This is where I want to be a little bit more precise. So I'm looking at this candle, 1760. Major buyer stepping in. Yeah, 1780. On a pullback, this is clearly where they stepped in before to make this push higher. I like that level. But yeah, this 1860 is going to be a major breakout if it does get there. See if I can get another tag on another level. Look at this. The last time we hit break and clear at this level here. Oh, God. It's this 1836. 1838. This big old candle. This is what could be happening. So I might take some of these just... Let's give you a big flag. I don't want... This is hopium, for sure. Technically speaking, the next target's 1880 and 19. So just keep that in mind. But check this kind of stuff right here. These big weekly candles right at this level that we're sitting on literally right now. This is the squeeze zone. This is a big deal. All right, Nick wants to take a look at FCX. So FCX also same kind of play, right? So I like these commodity plays better than the equity plays just because they're so much more tied to the dollar. And I'm just looking at that chart. That thing is, I mean, it's going to take a breather. And that's exactly what the metals needed, in my mind, to get this party started. Sorry. So FCX is a copper miner, right? So copper is another one of these squeeze plays that is on the underlying. So a lot of these guys, if you're looking at GDX would be like NEM, Newport Mining, would be one. That's probably the biggest weight inside GDX for the gold miners. There are gold, GDXJ is another one, gold junior miners. And you have some 3X leverage ETFs as well I could throw in there if you're not an options trader. Those might be good to take a look at here. So Freeport has a pretty big deal, in terms of breakout here. Here's the thing. So when I first started trading this guy recently, right, it was right off of this kind of bottom and channel, just a clean channel up, right? It fell out and then reclaimed just recently, right now actually bouncing right off the bottom of this channel. And if you're not used to doing these kind of things, you're just going to connect, give or take, like these lows. This is actually pretty clean here. Take this low. This is where TA is not, it's not a science, but so I'm going to look at this level here where they really came in, this wick here, and all of these kind of like higher lows, broke down. This is kind of a flusher on this guy, but it's now reclaimed this channel. So if we get a bounce here, and FCX after this 29.30 kind of break up last week, it's just been a gap and go. I would be very aware of this 30.84 level, which is a potential gap fill. So if it breaks below this level right here, this is this downtrend would be 31.80. I would actually be short-term short down to 30 and change, and actually start looking for a bounce right around this level. Man, big candles open in here. I don't think we're going to get a shot at this 28 again, but if we do, that would be it. And really this 27. But for right now, we're not quite clearing new highs. Above 32, 33 really is where I'd be looking for, okay, this thing could definitely squeeze. We, I believe, have some gaps. Did we fill the gaps? We had some gaps to the upside. Yeah, it looks like we filled this one. We have a gap here at 37. That's tradable. That's a little exciting. $33 filled. This is the next one right here. $36.90. So, quick stuff, right? So if it breaks above, for me it's this 33.89. I would take that quick, upside, probably a 35 call, and look to take profit on this gap fill at 36.90, almost 37, right in that area. If we do get this trigger, so trigger long would be a close above 32, and really swing 33.90. Yeah. So Freeport, by the way, this is also major upside potential. I think we had this kind of like, this is not as good as some of the other charts that we've been looking at, like the SLB and things, but if it did reclaim this entire downtrend or uptrend, this is a good potential swing in my mind. One thing I haven't looked at yet, and you definitely need to do, is that we do a subsector check. I do a subsector check, by the way, every morning right after the main look, and that looks kind of like this again on these 30-minute charts. So uranium's been a pretty big trader. I'm thinking like rotational right now. So in terms of what's going to happen in the back half of the year, that's where I want to be focusing a lot of my shorter term trades anyways. Healthcare, staples, and oil and energy, those are the main areas. I think that the metals and minor stuff, as great as it looks, they're mostly squeeze plays. I don't know that they're going to be super long lasting, so I'm planning on taking profits when they show up. A little bit late to that trade, so I think that is what it is. No more earnings this week, but after the 15th, by the way, we go into, I think it's a speech. So we get CPI on Tuesday, PPI Wednesday, and we go into like a quiet period for a lot of companies and the Fed. So the Fed is currently in a quiet period this week until we get to FOMC next week. And then earnings season kicks off again next month. And so from now till then, there's not going to be a whole lot of like revisions of guidance or things like that. And the banks will actually kick off first. So short-term stuff, if we get a bounce after this week, I would be looking at some actually like time spreads, taking advantage of some of the bank's implied vol that's going to be elevating as we get into the first round of earnings season. And that would be like a 3-week kind of thing, buying like 2 weeks out. Actually, I was thinking like JP Morgan, probably 125 calendars. Yeah, just targeting this kind of range up here. And that would be selling like next week, buying probably 2 weeks after that. So just a heads up in terms of trades that are coming out, potentially happening very soon. Cool, so those are the main ones. I think I have some seasonal stuff. If anybody has anything they want to take a look at, by all means. One thing, every year we have NFL draft, right? And so there's one stock in particular that is very positively affected by this every year, and that's DraftKings. So this is definitely one to put on your radar. I think we are looking like it could continue higher. 1760 here was today's low. Ideally, I was looking at the $16.90, maybe $17 level. I'm not sure if I'm going to get it, but the way I'm going to have to play this at this point is if it does get a close above 18, we could see a very quick bounce to the upside. I'm looking at these $19 calls for this Friday with 23,000 volume on them, on this guy here. Overall, DraftKings, 76,000 calls, over 16,000 puts. Definitely a bullish flow. And again, short-term trade, nothing major, but a weekly potential trade for sure. It's a good price. $19 calls, $24. 23,000 volume in climbing today. It's about split between buyers and sellers. So careful there. Need to see a close above 18. And then that's free and clear. I think that's an easy swing for potential squeeze. Daily looks like it's about to flip up. Hourly is over the zero on the MACD. Yeah, looking decent. If you missed that, I think this looks good. If you missed that, Penn Gaming is the second one in this kind of thing. Is that Penny Slayer DraftKings? Yeah, man, love this. I give you permission to take credit. Yeah, right on, dude. Very cool. I love it. So Penn is one I actually grabbed. So Penn is not a day trader. It doesn't have the bid-ask spreads that are tight enough like a DraftKings. I did start nibbling at these October 35 calls. 1,600 volume, not nearly as liquid as DraftKings. And then if I look across the board, that is the strike that has the volume. Again, this guy, 3,700 volume on the calls versus 786 volume on the puts. Definitely a bullish flow, sitting right on these breakout levels right here. So close above these breakout levels, 33 on Penn. You got some pretty nice targets to the upside on this guy. So I would go target 35, 50, 39. Excuse me, about 39 is your 200-day moving average on this guy. Hourly chart looks beautiful. Daily chart looks like it's about to squeeze up. Weekly chart looks like it could squeeze to the upside as well. The other two, MGM was one. All similar charts. Here we go. You're already at some targets here. Above this is going to be another breakout level on MGM. So gaming sector, very seasonal. MGM, I got some notes here. A little bit more China exposure, so not going to get the same kind of move as like a DraftKings or Penn Gaming will. The other one is Win. Definite China exposure, but again, here we are. Win is sitting on this breakout level, 63. Win has some really good dollar targets for option traders. So remember, what matters for us is dollars. So net dollar moves, not percent. Penny Slayer is getting wild in the chat. I love it. I'm trying to look across the chain here. Again, not a lot of volume. So I'm probably going to skip Win, even though the chart looks good. It just doesn't have the same catalyst. The thing about Win, it has a lot of China exposure, and China is not where I want to be right at the moment. It's not going to have the same kind of like price action that DraftKings or Penn Gaming will have. DraftKings, yeah, this is a clean trigger actually right here. This is bouncing off yesterday's high. So yesterday's high on DraftKings, just using this 30-minute chart, 1773. A close above that, look at this. This is a bounce up, come back down, fill this downside gap to hold, and going higher right now. This is clean. Above, it's clean here now, man. Cool. Penny wants to take a look at Apple. Yeah, so Apple is solid. It's been super strong out of the gate. I have a couple things. So this from here to here, right? I have a like 6.5 retrace, 164. I think 162. You're very close to your targets on Apple, by the way. So your 200, you basically just broke above, and that's really what's making this big push. So if you were to, so this red line here, this is a 200-day moving average locked on the daily interval. That's what's giving this extra momentum. So pushed up towards it, came back down to retest it, bounced up off of it. That's going to have some Momo for sure. So actually, yeah, you could get to this 163 level, very close to targets. It's going to put you right here. I'm going to draw these lines out for you. $163.10. 163, I'm sorry, 34. That's going to be target for sure. And then after that, you're going to run to this stuff right in here. maybe 165, just round numbers. Take this line right here, 166 and change. And a good short signal on this guy would be a fail back around 170. Man, this is gonna be an amazing like range trader for sure. I like that. So 1, 2, 3. Here, if I take this, swing high, swing low, right here, 50% retracement on this most recent swing high here, most recent swing low here, 50%, 164.24. So I'd be very, very cautious, be out the majority at that point, which is just a little bit higher than we are right now. Yeah, you gotta, looks like a little blip right here, 164.50. Apple was holding. Yeah. MRK. Yep, so MRK goes into the healthcare sector. MRK, maybe not quite ready. It's back into this kind of consolidation range here. So this could bounce around for a little bit. Yeah, you could get to these 90s, is what Nick is asking about here. 90 targets, easily. Yeah. The problem here, you tag this 89. So you want to wait for a close above that, or you can get a bounce off of this kind of level in here. This is yesterday's high, 88 and change, but target 1, 89, target 2, 90, and you're right in this consolidation zone right here. I didn't want to see PFE. So Pfizer, different story, right? So Pfizer clearly broke this downtrend. I like this. I actually bought some equity after that trade the other day. PT here, we're actually going back up. So at this point, 49 could be in play very easily. Here's the Pfizer situation. So if you didn't know, major downtrend, right? And if I take this guy, Pfizer's kind of at targets. We'll see. This triggered around 46, so I might be done with this. So we get a little pullback. If we get a pullback and you get to this 47.83, right on this wick right here, and you get a bounce, that's actually when I would see this kind of breakout. So here, down a little bit, and then you could break, and this could be, so you have this 200-day right here. So it'd be a nice target, 50s, off of a 47, 80-ish pullback. That's what I would be looking for. That's probably overnight kind of thing. Into earnings catalyst, so definitely before then. Remember, this is a daily chart, so you got some extra time. All right, just quick time check. We're okay. Went out crowd. Yeah, similar to Apple. I think we get this bounce this week, right? Depending on how CPI comes in. I mean, 200 has been the hard line in the sand for crowd for a long time. Right here. So this is your first one. I wish I could take this ride with you, man. I am not ready to hit this. So if it does close above, sure, I would be very cautious in this level, like in this area. If you get to 204 and you clear that and hold, I would absolutely be happy taking some calls to the upside. But until then, that would have to be kind of like your target. The thing to be careful about here is you have a high, a lower high, a low, another lower high, a lower low. So this could be just another lower high, and you're in a full change of character here to the downside. So it has to break above the last high at 197. Has to. 198.25. Let me zoom in here just to get a little bit more precise. Yeah. Otherwise, if you hit this If you hit this and you get rejected, that could be nasty. This kind of nasty. All right, cool. All right, guys, that's it for now. I really like just the metals, oil, energy in general. Speaking of, if you didn't know, Devon, again, looking like it's ready to break out for another one more move to the upside. Breakout zone, 71 and change. We almost got there already this morning. So above that, yeah, headlong. Trigger was actually like pre-market today, so you couldn't really do anything from an options perspective. If it holds above this, yeah, we're going to go 72. 72, targeting 80. Above 72, we want to target 80 for the swings. Weekly, look at this beautiful weekly chart. Daily, another amazing chart. Hourly, the same. Just want to wait for that pullback. Looking at just under 70 for a nice pullback on this guy. Just around 70. Cool. That's it. So XLE, similar chart, right? To Devon. Devon's my favorite there. XOP, oil services. We have an Exxon trade on now. Gonna start looking for some rolls if you're in the servers. Pretty much at first targets. So I'll give this one a second to breathe. And you know what, the one we didn't look at? Coin. Super interesting. Coin, if it bases at 80 and we see crypto stay alive here after that quick flusher, could be an interesting one. It's played out quite a bit, so we'll see. You need to see some serious strength. But this is this 80.91, right? So where did they come in? Right here. This is how we do it, right? Just kind of like look to the left and find where are the big, fat, juicy candles, like this guy right here. 82, 74. Major stepping in here. Stepped in one more time, right around this level. Below that, you got one more you want to be aware of. This is what? 78.90. 78.890, I think I like better. That's right here. 78.90. If you get a press above that. Sorry, let me take these texts off. We're right in this level. So 78.90 I'd be watching for sure for a bounce. Probably taking some 85 calls. Premiums are through the roof on this thing right now. So be super careful. Super careful. And this is a clean short. Clean short below 78. Cool. All right, guys. That's it for me. We'll check you on the next one. Adios.